This is Business Lunch. I'm Sonia and with me is Mangalam. Hi Mangalam, afternoon. Looks like it's a good day but for banks, right?
Yep.
I mean, the bank Nifty is the one that's really soaring ahead after hitting that all-time high yesterday, led by a lot of players that were perhaps had fallen by the wayside. So IndusInd Bank, for example, had lost a lot of investor participation over the last many months. It's come back, and how? 3.5% higher on that stock. It has HDFC Bank and a couple of others for company as well. But otherwise, in the mid-cap space, there is the kind of pressure that we saw emanate in last hour of trade yesterday as well.
Absolutely. You know, this is Business Lunch and you always accuse me of using wordplay. So let's just say that the Nifty and the Sensex, after this massive rally, have paused for breath. The mid-cap index has gone on a lunch break, which is why a little extended in terms of its underperformance, because it saw that outperformance as well. And Bank Nifty seems like it's at an all-you-can-eat menu. You know, every bull is moving on the Nifty Bank, which is at the high point of the day. In fact, a record high for the Nifty Bank itself.
Where do you come up with these, Mangalam? Do you have a book or something?
I wish I did.
A book of puns.
But I mean, I don't know what else to say, because it's Business Lunch and it's all you can eat for Nifty Bank. What we talk about is the markets, but let's talk about the big developing story that has happened. Like India has joined a host of other nations in banning operations of the Boeing 737 MAX 8 aircraft from its airspace effective 4 p.m. today. So we have Anu Sharma joining in with more. Anu, apart from US and Canada, everywhere in the world these planes are grounded.
Well, that's right. 10 airlines across 7 countries. Only carriers in the world which still continue to fly the MAX aircraft. If we talk about the number of carriers, there are 3 carriers in the US and 2 carriers in Canada which still are flying these MAX aircraft. In terms of the overall global fleet, 65% of the global fleet of MAX is currently grounded, which means that 35% is still flying. So now when it comes to India, in India there are only 2 carriers which have these MAX planes, and as per the order which was released last night by DGCA, the order said that we are immediately grounding these MAX planes. But then today DGCA issued another notification saying that the grounding will be effective from 1600 IST or 4 p.m. today. A meeting is also expected to take place between the secretary and the airlines in order to frame the plan of action now that a lot of cancellations and rescheduling will take place, as SpiceJet has 12 of these MAXs and it flies to 2 international destinations, and if we take 6 sectors for 1 aircraft, that basically means that around 10,000 passengers or around 100 flights will get affected on a daily basis. Now it remains to be seen how much compensation will these airlines get from Boeing and how soon will this grounding can be revoked, because as of right now, while FAA believes that they have still not found these planes not airworthy and they think that these planes should not be grounded, Boeing has not been able to come up with a reason for 2 fatal accidents within just 5 months in the same aircraft model. Back to you.
Okay, Anu, thanks a lot for that. In fact, as you pointed out, SpiceJet is the one that gets impacted the most. They put out a statement just a while back where they said that they've already initiated grounding of MAX planes. They expect to ground all the MAX planes by 4 p.m. today, and they've cancelled 14 flights today already. 64 out of 76 planes in their fleet are in operation currently. Now, we did get a chance to speak to a lot of analysts on what the impact of this would be. The biggest impact is that there is lack of clarity on how long these planes will be grounded. So that's the big overhang. Apart from that, this will result in an unexpected drop in capacity that will support yields and favor a player like Indigo. So that's the reason SpiceJet is down and Indigo is higher. For SpiceJet particularly, the earnings growth on account of the volume expansion, that gets postponed. In the interim, until there is more clarity, SpiceJet can try to take dry leases as well. But a couple of other aviation experts believe that all of this will lead to an immediate hike in fares. So Kapil Kaul told us that about a 15 to 20% rise in airfares is what you can expect because of the capacity shortage. Also, what Interglobe could do now is take a call and increase their domestic capacity in order to sort of, benefit from what's happening with the other players. For SpiceJet, India Nivesh told us that the sentiment is negative, but the P&L impact at the moment is nil. Let's listen in fact, to what the analyst had to say. Here's Kapil Kaul of CAPA with his view.
There is a lot of MAX inductions that SpiceJet was likely to get over a period of next 1 year. Then you couple it with there is already a jet significant capacity reduction by jet, almost about 40-50 aircraft grounded. Then you take the pilot-related challenges which have led to grounding at Go Air and as well as Indigo. Then you combine this all together. Then you're heading for a peak period. So I would think that the fares would go up and it would be a very significant Q1, both from the consumer perspective, because there will be capacity shortage and the fares logically would be much higher than that normally is in Q1.
Absolutely. Stock market impact aside, this is a developing consumer story. So from CNBC TV18, we wish you all safe flights and also commiserations if you are disrupted at the airport with regards to your flight schedules. But the banning of the Boeing 737 MAX 8 aircraft remains a developing story. You can catch the latest by logging on to our website, CNBC-TV18.com.
All right. Well, moving on from aviation to real estate, stocks are in focus. CNBC TV18 learns that the GST Law and Fitment Committee has proposed a reversal of the input tax credit by real estate developers on input goods and services lying unused as on March 31st. This, of course, will be negative for a lot of the property companies as they can't pass on the input tax credit to the consumer, which means that prices might rise and demand might fall. Timsi Jaipuria joins in now with exclusive details. Timsi?
Well, that's right. What we understand from sources as of now is the fact that the agenda is almost set for the upcoming GST Council meeting. And the GST Law and Fitment Committee has proposed that the only way forward for a smooth transition on real estate, that is from old rates to the new lower rationalized rates, is that the ITC on the input of goods and services, which is lying unused as on 31st March 2019, should be reversed by real estate developers through their return form, that is GSTR 3B. And government feels that the ITC benefit available to the real estate developers will actually lapse and die over there itself. And from 1st April 2019, any new invoice raised by the builders will have to be charged at 1% for affordable housing, again without ITC, and at 5% without ITC for other than affordable housing. Now remember, the 34th GST Council is all set to meet on March 19 to finalize the transition norms for the reduced rates on real estate. Now meanwhile, the government has also assessed an impact of this change, and this assessment actually is a little worrisome for the home buyers because the cost of affordable housing could go up and the cost of luxury housing could drop once this transition happens. Also, developers might go in for repricing of projects, and it will be tough for the government to track the procurement clause that they have put in, which says that 80% of procurement needs to be done by registered dealers. Also, this entire scheme of things might result in a sudden increase of anti-profiteering complaints. So it's a mixed bag that government will have to take a tough call on in the upcoming GST Council meeting. We'll keep you posted.
Timsi, thanks a lot for that. With that, we'll step into the Nifty Bank stocks doing fairly well. Yes Bank has taken a sharp surge just as we speak, taking the Nifty Bank higher. The Nifty Bank at a record high with about 230 points in the green. Along with that, as Sonia was pointing about, IndusInd Bank too continues to sustain at record highs. IndusInd Bank, remember, is 20% off its recent 52-week high, so there is some further room for upmove out there as well. So trading higher. So talking about the markets, let's get on some market opinion. Morgan Stanley's Rhythm Desai is optimistic on the earnings growth trajectory over the next few years. Speaking with CNBC TV18 earlier this morning, he said that the market has been very resilient to the macro environment and an upmove can continue if the conviction of a majority government is priced in.
Nifty was very resilient through this phase. It hardly reacted to what I would say was a pretty challenging macro environment. Nifty should have behaved more poorly than it did. It hasn't actually behaved that poorly. In fact, if you look at it from the beginning of October to now, the Nifty is actually also flat against emerging markets. 2 years on, more capacity has got utilized in the private sector. So right now I would estimate, or I should say guesstimate, that utilization rates are in the low 80s. And another 2 years they'll be in the low 90s. Now it's a time at which capacity needs to come on stream. So sometime in the second half this year, post-elections, I think the private sector will start debating CapEx. And in 2020, I think we should get some CapEx from the private sector as well. I think we are at the beginning of a new fundamental cycle. Now, these are long duration cycles. They tend to last for 5-7 years. So arguably, I would say that, we are at the beginning or, maybe a few months into a 5-7 year cycle in which I think we should witness pretty strong earnings growth. It will not surprise me if earnings, put in a 20% CAGR over the next 5 years.
Moving on, a host of pharma companies have received warning letters and observations from the US FDA. So things have been looking a bit tough over there. Ekta is here to give us a roundup. In fact, all of those stocks are down in the red this afternoon. Ekta, over to you.
A couple of stocks are in focus. So, for example, I'll start with Jubilant Life, where their Roorkee facility received a warning letter from the US FDA. And remember that we had already known that this particular facility had received a warning letter from the US FDA. But they have pointed out in the warning letter that there are some discrepancies which Jubilant Life Sciences would need to solve going forward. So, they have spoken about some amount of issues with regards to consumer recalls and the fact that there have been repeat observations from the last time that they had inspected the same facility, and hence maybe there should be some additional measures which need to be taken. So Roorkee does not contribute that much. It's around 4% of total sales for them, but nonetheless important that they've received a warning letter for that. Aurobindo's Unit 16 is in focus because they received 11 observations for that particular unit and was inspected from 22nd Feb to 1st March. Again, some of the observations, according to experts, will probably take some time to solve. But again, this particular facility is quite new. It was commissioned only in FY 17-18, and hence the contribution of financial impact would be limited even if there is an escalation or the remediation takes longer. And lastly, Biocon has received 2 observations for its Bangalore facility. This was basically, I think, for a PAI, pre-approval inspection for its insulin manufacturing plant. 2 observations are now known to the market, and the market seems to be a bit sanguine about it. But there are 6 additional observations which were issued following another inspection which took place in the Bangalore facility. So maybe there's a little bit of concern which the market is probably sensing on that.
Giving the pharma stocks company on the downside, we have all the public sector units or PSU stocks which are losing. And this is as the government looks to raise up to 10,000 crore rupees to the 4th tranche of CPSC ETF. So that's causing some supply pressure on these stocks. To detail more of this, we have Nimesh with us. Nimesh?
We broke the story yesterday evening that the 4th tranche of CPSC ETF basket is going to get launched on the 19th of this month. For 19th is a date when the anchor investors can put in, and for non-anchor investors is 20th and 22nd. Now the government is looking to raise between 3,500 crores to 10,000 crores. So the 3,500 crores is a base book, and there's a green shoe option of close to 6,500 crores. So up to 10,000 crores is what the government can raise. Now this is a ETF where there are 11 stocks. Largely the biggest weightage is with ONGC, Coal India, IOC, and BEL. These are the 4 stocks which will have a massive impact as far as the ETF weightage is concerned. I'm not taking RSC and PFC because of the impending merger. Those 2 stocks may not be part of the ETF. So that's why the weightage of other stocks will go up in that basket. And maybe that's the reason why the stocks are down in trade today. I think BEL at least in the last half an hour of trade has bounced back a little bit. But there is largely pressure on Coal India, ONGC, Oil India. And of course, BEL also will be under pressure because of the fact that there's an ETF coming up in the range of 3,500 to 10,000 crores.
Okay, thanks a lot, Nimesh, for that. Some important macro news coming in. The Federation of Automobile Dealers Association has released their monthly vehicle registration data for the month of February, and it's not looking good at all. February auto sales have fallen to newer lows as weak consumer demand continues into the 6th straight month. Passenger vehicle sales have fallen sharply after a temporary spike in January. Two-wheeler degrowth increases further, but CV sales fare much better despite the weakening of demand, and dealer inventory levels across all categories are at an unsustainably high level and alarming levels in two-wheelers. That's the word coming in from the Federation of Automobile Dealers. All right, but moving on, after a recent change of guard at the government-run canteen stores department, sources tell CNBC-TV18 that CSD, which is the single largest client for consumer goods companies, contributing about 5 to 7% of FMCG sales, is likely to hold its first large-scale open house discussion with business partners, which includes the like of big FMCG companies like HUL, P&G, Nestle, as well as startups and MSMEs. CNBC-TV18's Priya Sheth has this exclusive for us. Priya, when is the meeting likely to be be held, and what kind of issues are likely to be discussed here?
Well, absolutely. The Canteen Stores Department is likely to hold its first large-scale open house discussion. This is, remember, under its new chief. And in fact, what we do understand from our sources that this meeting will be with several consumer goods companies, which includes the likes of the biggies, including HUL, P&G, as well as Nestle and many more, as well as several other startups, as well as MSMEs. There are close to about 600 business partners who also, supply goods to the Canteen Stores Department. So therefore, this is likely to be a larger umbrella meeting with several of them. Now, this meeting, we understand, will be a likely mutual exchange of ideas, as well as, there will be several issues that will be ironed out, according to what sources are telling us. There are several issues which includes payments, order control, as well as delivery control and quality control, which will likely to be discussed as far as this meeting is concerned. Now, as far as the new product launches are concerned, several products reach the canteens with a lag period. So therefore, there will be some conversation with regards to how the lead time can be lessened with regards to the new products, is what we understand from our sources. Now, the meeting is likely to be held in April, is what we learned, and we'll be really keeping a track of how this pans out and how it shapes up with several of the FMCG as well as the other consumer goods companies, startups, MSMEs who will be attending this meeting. In fact, we did reach out to the CSD, and they have confirmed that the management will interact with business partners shortly, and the interactions will take place with the view to meet the aspirations of the end users.
All right, Priya, thanks a lot for that. Definitely, this is a story we'll be keeping an eye out on, because with the CSD, all the FMCG companies over the last few quarters have been facing a bit of a rough weather. So this is an important meeting. Let's see how it goes. With that, we...
Business Lunch on CNBC-TV18. The big global talking point overnight has been the Brexit. In a major setback, Theresa May's EU withdrawal, the European Union withdrawal deal, has been rejected by members of Parliament by an overwhelming majority for the second time. MPs voted down the Prime Minister's deal by 149 votes. CNBC's Steve Sedgwick reports. Steve, what's up next?
No one really knows what's going to happen next, and that's the good news for me as a pundit here. I can't get it that wrong, because nobody knows the chronology of how it goes. What I can tell you is that things 24 hours ago were looking a little bit brighter for Mrs May. She'd come back from Strasbourg. She said she'd got two very definitive legal agreements that were going to sit by the treaty, but then things started to unravel as we spoke to guests throughout the morning, and actually one government minister came up to me and said that he hadn't seen what motion the government was putting until he saw that it said that the risks of being stuck in a backstop, which of course is this agreement that stops there being a hard border between Northern Ireland and the EU, would only decline and hadn't been eliminated. And that was then followed by Geoffrey Cox, the Attorney General, the Chief Legal Officer of the government, turning around saying, no, we could still be trapped in the backstop as the United Kingdom as well. And that sealed really the fate of the vote for the Prime Minister, who went in, of course, having had a record defeat back on January the 15th on her meaningful vote for her withdrawal agreement. The good news for the Prime Minister is it wasn't a record defeat this time. It was the fourth record one in history. It was 149 votes, 391 to 242. 75 Tory MPs voted against her. So that brings us to the present situation. And Mrs May has now given her MPs a free vote on whether there is going to be a no-deal Brexit scenario. That's going to be voted on later on today as well. But Mrs May, who was fighting a severe cold and a very, very bad throat, it was very hard to listen to her actually throughout her speech as well. She really laid it on the line of what happens next in this no-deal vote.
All right, thanks a lot for that. We'll keep an eye out on that story as it develops. But meanwhile, we have some news coming in on Bajaj Finserv, where Rahul Bajaj has resigned as chairman, has been appointed as chairman emeritus. Actually, it's not more retires as chairman than resigns as chairman, given his age, 80 years. His successor will be Nanu Pamnani, who's currently the non-executive independent vice chairman. Ex-City has been the non-executive independent vice chairman since 2007. He himself is 73 years old, so he succeeds Rahul Bajaj. We'll keep an eye out on that.
I think it's normal course of business,
it's absolutely normal course of business.
And Nanu Pamnani is their uncle, so it's all in the family.
Okay, it's all in the family. So, yes, that is that's about Bajaj Finserv. But let's move on. United Nations Security Council, UNSC as we know it, the deadline to blacklist Jaish-e-Mohammed chief MasoodAzhar ends today. We have Parikshit Luthra joining in with more. Parikshit?
India has been lobbying hard to blacklist Maulana MasoodAzhar at the UN 1267 committee. In fact, our efforts to blacklist him go back to 2008 after the 26/11 attacks. China had stalled that move, and China continues to stall India's proposals to blacklist Maulana MasoodAzhar at the UN 1267 committee. Now, what will this really do? Blacklisting would put a ban on the travel and financial assets of Maulana MasoodAzhar. It will make it difficult for him to operate. It will also send out a strong political message to Pakistan that China will no longer defend it on the issue of terrorism, and Pakistan, its army and the Foreign Office will no longer be able to deny in the international forum that Maulana MasoodAzhar lives in Pakistan and uses Pakistani territory to carry out attacks on the Indian soil. Having said that, India has been working with diplomats in all these 15 UN Security Council member countries. It has lobbied very hard with the 5 P5 members. We have shared audio recordings of Maulana MasoodAzhar, some of which are also in public domain, with all UN Security Council permanent members, dossiers of the Pulwama attack and evidence of what had happened on the 14th of February when the CRPF convoy was attacked has been shared with all 15 UNSC members. Now, as the procedure goes, if there are no clarifications or objections that are filed by 3 p.m. US time or 12:30 a.m. India Standard Time by Thursday, then Maulana MasoodAzhar would automatically be blacklisted. India is hoping for that to happen, and they feel this will send out a very strong message to Pakistan and the international community.
Okay, thanks Parikshit for that. With that, it is curtains down on Business Lunch from Mangalam, myself and the entire team. You have a good day. Thanks so much for watching.